TD Cowen publishing some best ideas for 2024 this morning in the airline sector. What is it going to be? We didn't know till this morning. And I'm going to tell you right now, and I'm not going to tell you until I introduce her. Our next guest, Helane Becker, TD Cowen, senior research analyst. And need a drum roll, or we need to. And this guy's a friend of the show. We have him on a lot with Phil LeBeau. Well, let's just do it. What's your best pick for 2024, Helane?
Hi, Joe. Thanks. Delta Airlines, DAL, is the stock symbol. We have a $49 price target, and which is about 5.4 times enterprise value to EBITDA. We know it's outperformed over the last few months, but we think the market's starting to differentiate between Delta and the peer group, and we think Delta is going to work for next year. After 2 years of focusing on United, we're kind of pivoting a little bit to Delta.
A lot of it has to do with Europe, I guess, and so that's back. Atlantic passenger segment has been big this year, and Delta enjoys that. But you think the Pacific starts getting big? Were European airlines slow to add capacity, Helane?
Yes, Joe, you're really good at this. European airlines added a lot, did not add capacity last year, while the U.S. airlines did in the North Atlantic. And in 2024, we expect a lot of additional capacity from them. Lufthansa, for an example, is adding 16% more seats next summer. JetBlue, which is not a European airline, but expanding in Europe, they've applied to fly to Lisbon for next summer. So we're seeing, on the one hand, low-cost long-haul airlines going into the market. And on the other hand, Delta's only growing capacity by 6% next summer. So we think that, in the Atlantic specifically, so we think that they'll, their best customer, their worst customer is a low-fare airline's worst customer. So we think that premium differential between them and others will continue. And then, to your question, they're adding service to the Pacific, where they have a very strong position, having done the Northwest Airlines acquisition a bunch of years ago. So that gives them a really good, broad international footprint. And then in Central America, Aeromexico code share, and South America, the LATAM agreement should enable them to continue to grow their international footprint closer to that 50-50 mix from the sort of 60-40 mix it's at right now.
What is happening in the Pacific travel what happened so that it was muted, and what's happening there that's more positive right now? And is China part of the equation?
So yes and no to China, typical sell-side answer. In 2017, there were over 100 flights a week between the U.S. and China among all airlines, both the Chinese and the U.S. airlines. Now, this summer, there were 12. Now there are 18. And by the end of the year, there will be 24. So we're still way down. We still have the 10-year visa program with China, so that has huge positive implications. We're not expecting China to grow as much as we're expecting the rest of the Pacific to grow. What we see happening is that the Asia-Pacific region was the last to reopen. And what we've seen, and you guys have done such a good job with Phil reporting on this over the last few years, is that you saw domestic operations opening, domestic markets opening sooner. Then you started to see close-in regional markets opening and people feeling comfortable traveling to those regions. And then the Atlantic. So people started to fly further and further. And of course, all of Europe was open this summer. I mean, everybody I know went to Italy except me. And now next summer, the whole Asia Pacific, which was last to open earlier this year, starts reopening, and people want to do those bucket list trips, and they're getting back on the road and going again further afield. So that's a lot of what we see happening. And then, of course, the financial side, Delta's just got a great balance sheet.